Hello guys, this is FX Trading Academy and welcome once again to my YouTube channel where we do mostly the top-down analysis of different financial securities, and today we're going to be looking at a Forex currency pair AUDJPY, which simply stands for the Australian dollar paired against the Japanese yen. So without wasting much time, let's look at what this pair holds for us. So as you all know, I do my top-down analysis using pure price action trading strategy, and currently I'm on the monthly time frame. And like I always say, what we try to achieve on this time frame is to get the directional bias of the market as well as plot our key zones. So as you can see on my chart, I already plotted key zones, and if you don't know how to do this correctly, I have a video on the channel dedicated solely to this, so you can check it out to get a hold of on it. So on the monthly time frame, what can we see? We can see that for quite some time now, this particular pair has been making a series of higher highs and higher lows. Now, what do I mean? We can see that it's made a higher high, a higher low, higher high, higher low, higher high, and then it's retraced downwards to give us like a higher low, and currently we can see that the market is pushing upwards. So simply put, we can say that directional bias for AUDJPY is bullish. And where do we think it's heading to? We think it's heading to this next resistance zone because, of course, there was a deep retracement, but the retracement wasn't strong enough to take out the most significant um, higher low. And of course, we saw this rejection, this big rejection candle pushing price upwards. And the beautiful thing about this is that if we look much more closely, we can see that price has just been rejected from a major support zone, and the presence of this green candle is telling us that even this month of September, buyers have been in control of the market. So having this in mind, we can take this out. Having this in mind, the next thing that we'll get to do will be to go to the weekly time frame. And of course, for those that have been following me on the weekly time frame, what we try to get is if we can get a hold on the structure, like a chart pattern or a particular market structure presented to us, which we can work with to get trading opportunities. Now, on the weekly time frame, we can see that the uptrend of the market, this part of the market represents the retracement that we saw on the monthly time frame, and this portion of the market shows us the bullish movement currently happening in the market. So if we take this out, our concentration will be on this part of the market. And like you guys know, I use three basic tools for my analysis: the trend line, support and resistance zones, as well as the Fibonacci retracement tool. So as you've seen, I just included a trend line on this particular chart. But let's go to the line graph to see if we can see any particular um, market structure to work with. So if we look at this, we have like a W chart pattern here. And of course, the simple rule for trading W chart pattern is when we have like a W, I've explained this severally, we wait for price to come back to the neckline of the W before we start looking for our buying opportunities. So W chart pattern is actually a bullish reversal chart pattern, or when we see it like um, in this case, it's going to be like a bullish continuation chart pattern. That's would be its purpose here. So of course, neckline would be here. So when price comes back into it, then we start looking for what our buying opportunities. So like I mostly try to explain, price has the liberty always to come beneath this neckline and even come as far as to make like a third bottom to give us like a triple bottom before going upward. So long as this bottom is not taken out, the chart pattern remains valid. So that's the simple explanation for trading W pattern. That's something that we have here. So if we are to come back to this chart to see how to now trade it, so we're going to have our neckline around this place. A neckline around somewhere here. So if I'm to then include my fib to be from this swing low to this retracement that was seen. Okay. So now having this setup, the next thing that we'll get to do will be to go to the tradable time frame, which is the daily time frame, which is our next lower time frame. Remember, our directional bias is from the monthly time frame. It's that we said that AUDJPY is still heading upwards towards this resistance zone, and we've seen a W chart pattern to support our claim that this market is still going to go upwards. And the next thing to do would be to see if we can see from the immediate trend of the market on the daily time frame, if we can get trading opportunities as of now. Okay. Now from this particular time frame, let's adjust this. We can see that the market has made like two big touches on this trend line, like the major trend line from the weekly time frame. Now, what does this mean? We always say that the third touch of the trend line does the trick. If we look at our FIB2 from this swing low down to this place, of course, I have my Fibonacci retracement golden zone. So we'll make an adjustment of this to come into this golden zone, which always aligns, as we can see in this case, it aligns with the neckline of the W pattern that we saw from the weekly time frame. We can see the W pattern here, from here, 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 and then this is the extension of the pattern. Sorry, let's do this again. So this is our W pattern. This is our W pattern. So this is the retracement that was seen. Let's zoom in. So this is our W pattern. This is the neckline, and the neckline is aligning with the Fibonacci retracement golden zone, which is the zone between the 0.618 and 0.5. And then, of course, we are seeing like a retracement. So the question I always ask is, now that we have our confluence put together, we have our FIB2, we have our resistance zone, rather our support zone, we have our trend line. The question will now be, how do we take advantage of this particular trade? When would be the best or safest option or safest time to get into this trade so we don't get our fingers burnt? So if you ask me, I would say I would patiently want to wait for price to come into this Fibonacci retracement golden zone. And if you look at what price is doing currently, even though we had this big push upwards, we can see that the push wasn't strong enough to create a new high. So it's still, price is still not above the most recent high. So I expect price to push back down to make a third touch of this trend line and probably come further into the Fibonacci retracement golden zone before pulling upwards. So if we are to go to the 4-hour time frame to see this much clearer, we can see that even though we had this big push upwards, price tried to make a retracement. The retracement didn't get to make a third touch of this trend line. We can place a counter trend line here. So this supports the postulation from the daily time frame. Remember that H4 is one of our entry time frame, and we get to refine this on the H1 time frame. So we can see that even though there was a big push upwards, like I said, the push wasn't enough to create a new high. You can see price already retracing downward. So my best option would be to wait for this retracement downwards on this H4 time frame to probably come here, make another touch of the trend line, and take my trade, my buy trades. In another case, because we have like a little zone here, price might even use this as a liquidity grab. Instead of making a touch of this trend line and pulling upwards, price can come here, just pull beneath it, make a third touch of this trend line, and then pull upwards. So you can always compare this with your analysis, like I always advise. This is my own outlook on AUDJPY. I think it's still going to buy for quite a while, but for those that trade on the much lower time frame, you might be looking to they might be taking sell trades, which I wouldn't advise because the market is strongly bullish. So as for me, I would be waiting patiently, be sitting on my hands to see what price does. If this retracement comes here and I see buying tendencies, then I can take my trades from here. But I'll be most comfortable if price uses this place as a liquidity grab, comes to make a touch of this trend line, and come, which would also be within my Fibonacci retracement golden zone. Then in that case, I can be looking to take my buy trades here with my stop loss underneath the 0.5% mark of the Fibonacci retracement golden zone. And of course, if you extend this upwards, this should give us like a good risk to reward, whereby this place, this would be my first take profit. But if we are even to if we are to extend it upwards, then we can see that we have like almost a risk, we'll be having a risk to reward of almost 1 to 5. So like I said, this is my own take on AUDJPY. You can always compare this with your analysis, and if it makes sense, then you can couple it to take your trades. So like I said, this is a trading academy. If you're starting out your trading journey and you want us to help you along the way, you can always reach out to us via the details on my YouTube bio. I also recently opened a Telegram channel where I give free trade signals from time to time. I'll be adding the link to this particular video so you can join and you see how we take our trades on the channel. Like I said, it's free and it wouldn't take anything from you. So you can always do that to see what other people in the markets are doing as well. So if this video has been of any value to you, it's only fair that you click on the like button. You can share with others to gain from it as well. And it will be better if you subscribe to the channel for subsequent analytical videos like this. So do enjoy the rest of the trading day, as today is the last week for the Forex markets, the last day for the trading week on the Forex market. So enjoy the rest of the day and cheers.